is going to be a daily digest of information, market updates, trends, movers, shakers, business opportunities, things of that nature. And so take a look out for that. But I know that a lot of folks have been really excited about who we're bringing into this community and the communities that we're going to be cross-pollinating with. So today I'm super excited to introduce everyone to Patrick Stanley. He is, out of all the folks that I know in the crypto space, the earliest of adopters, has been in the space for many years, and he can give you his full rundown. Also, oddly enough, we are related. I married his sister, so he's my brother-in-law. So over the last 10 years or so, we've just had a lot of shared interest in the technology space. He is actually the one who introduced me to my favorite book, which is 0 to 1, and another one of my favorite books, which is The Sovereign Individual. He actually introduced me to 0 to 1 before it was actually published, when it was still in Blake Masters' notes iteration, which is if you all know the story of how that book was written, it's pretty cool. So anyway, Patrick, I want to welcome you. Just a quick intro on Patrick, and he's going to do the rest. I will just preface it. He has been in the tech space for the better part of his career. Was one of the first employees or the first employee at Earnest, a tech startup that exited several years back. And most recently the head of growth at Blockstack, and they've gone through some rebranding and are now referred to as Stacks, but I don't want to butcher the story there, so I'll let him do it. And now he is the CEO and founder of Freehold, and the man behind City Coins and a bunch of other cool stuff. So I don't want to go any deeper. I'll let Patrick share with you all what he has going on. And Patrick, welcome. The floor is yours.
Awesome. Thanks for having me, and thanks for the intro, Matt. You guys have a really great community that you've built. So just congrats on all that. Whoever's sort of organizing that is doing a killer job. Matt kind of covered my background. I've been in the crypto space for probably I've been like obsessed with crypto since like 2012. I started actually working in crypto in 2017 after working in like fintech. I've always been a big Bitcoiner. I don't consider myself a Bitcoin maximalist. I consider myself more like a Bitcoin centrist. Like I have respect for Ethereum. I have respect for other protocols that are building. But basically, I see Bitcoin as the category winner of crypto. And I think it's like the obvious contrarian. It's like a contrarian yet obvious sort of protocol to build that's like hidden in plain sight. And so that attracted me to Stacks. Stacks is a smart contract layer on top of Bitcoin. So Bitcoin is sovereign money. Stacks is smart contracts on top of it. As opposed to Ethereum, which is trying to be smart contracts and money in the same protocol, which I'm less interested in. As head of growth there, Stacks is now like a $2 billion protocol. I spun out and I had a little time to sort of think about what I wanted to do next. And basically my thinking was, if Bitcoin is going to be the world reserve currency, and Bitcoin at $1 million is basically its own country, that other countries will actually even jack into to be like their reserve protocol. You're already seeing it with countries like El Salvador. You're seeing it a lot in South America, but I think you're going to see it basically everywhere besides the US and China. So if that's like the case, it's like, okay, Bitcoin's going to win. So if that's the case, what comes next? Do we have crypto anarchy, which is like, maybe crypto anarchy is better than what's happening in some major US cities. But I'd rather see crypto civilization, which is more like something that looks like a new way of society organizing itself. And so I had this sort of epiphany on a Twitter Spaces call last April, so like almost a year ago. We were talking about this. It was epiphany for City Coins, and I'll just give you the very quick backstory. We were talking about how projects, a lot of projects don't necessarily need to do an ICO if they adopt a certain. if they adopt a consensus, sorry, if they adopt basically like a consensus mechanism that Stacks had adopted, but with a slight variation. So what that looks like is instead of trying to replicate proof of work, or instead of doing a pre-mine or an ICO, uh, or um, or trying to do proof of stake, instead the consensus mechanism that we like is called proof of transfer. And basically what it does is it allows you to forward Bitcoin or any other sort of base currency into the protocol, and that currency is forwarded to all holders of tokens in that protocol. And so it's a way of kind of like bootstrapping a protocol into existence without an ICO, without a pre-mine. So if you send that base currency, you can earn some of that coin. Now, that's how Stacks works. And what we were so with Stacks works by forwarding Bitcoin, and you have a chance of winning Bitcoin. So you have a chance of winning Stacks rather every 10 minutes, and that Bitcoin is forwarded to all Stacks holders in like a pro rata way. So it's just like one direction. Bitcoin goes to Stacks holders. People mining Stacks earn Bitcoin. Hope that's understandable. And then so we were on a Twitter Spaces call, and we were like, well, what if you had like a dev fund that was 30% of that Bitcoin that was sent, instead of 100% going to all Stacks holders who have locked their Stacks, what if you had 70% go to the Stacks holders and then 30% go to a dev fund? And we were thinking, oh, whoa, that's kind of like a tax, like an opt-in tax. And then we were like, oh, whoa, you could actually just reserve this dev fund for a city and just like wait for them to pick up the bag. And there's literally nothing that can like it's very hard to stop that. And so the sort of like game theory thinking on that was the bag becomes big enough and the city claims it. And so initially we were thinking like, okay, maybe if the bag gets to, if like the city reserve gets to $200,000, the city can't reject it or can't turn it down. And that was kind of like what we thought was like the critical mass for this project, like getting on first base and like getting to the first step. And we like blasted past that. Like we raised $20 million for Miami, and $20 million roughly as of right now, like 20 million for Miami and 20 million for New York. And so what happened with Miami is we didn't even ask the Mayor Suarez, for permission to do this. We told him we were going to do it. He was like, "This is cool." The city will have the city like sign off on whether they can receive funds or not, which they ultimately did. But it was after the fact. So we activated the protocol with no promise, no contract, no agreement, no nothing. And it was 20 independent wallets that signed, like essentially, it's like signed a smart contract that said, "Let's begin mining in a day." So, a day later, after those 20 independent wallets signed, mining began. And so we raised a bunch of money for the cities. So far, how the city has put those funds to use is Miami has taken $5.25 million out of, at the time, it was like $25 million they had. And they've applied it toward rental relief for their citizens, because like the rent prices have gone up like insanely in Miami, because everyone's moving there because it's a desirable city now. Now that like the pandemic has essentially made everyone remote first, and that's interesting. That's great, and we're very proud of the fact that we can, like, an idea we had on a Twitter Spaces is like reducing 5,000 people's rents by like $100 a month for a whole year. That's really nice. And then the other thing that was announced was that the stacks currency that is in the Miami wallet can be locked, and it can yield Bitcoin through that same proof of transfer mechanism. And so the mayor of Miami announced that. Got like 30,000 likes on Twitter. from Anthony Pompliano's account. He's kind of like the Joe Rogan of crypto. And he tweeted that, and so citizens of Miami, there'll be like tens of thousands of people in Miami that get airdrop Bitcoin, and it's the world's first Bitcoin dividend. Um, and so that's probably going to happen in the next few months, which is pretty amazing. And so Miami is kind of like turning into something like an oil producing country that pays its own citizens for being citizens. It's pretty badass. Okay, so that's just on the city side of things. So we've essentially we've confirmed that yes, you can fundraise for a city basically. Uh, um, on the other side of it, it's like, okay, well, what can we do with the tokens now? So the tokens can be used for a variety of different things. Just like you can program smart contracts with Ethereum, you can do the same thing with city coins. And that's really important because if you're building applications that are specific to the city, you might say, you can unlock this door if you're holding Miami coin, but you can't unlock it if you're holding New York City coin, or vice versa. You could say, this smart contract for this application will work if you're holding New York City coin, and it only accepts New York City coin. So it's like city-specific applications that can be built now that revolve around a coin. You can create. One of the interesting things that I'm actually starting to dig into now is like with city coins, the protocol, you can create city cash, like a stable currency that is specific to a local region, and you could back that with like the 20 million in both of those cities' treasuries. You could back that stable coin with, and essentially create pardon me, essentially create a stable currency that the city has root access to. So instead of the federal government doing these like block grants where they're like, okay, my dear servants, you need money, tell us how much you need and maybe we'll give it to you. Instead, the city can be like, no, we got our own money. It's pegged to the US dollar, and it's essentially it expands and contracts based on how much it gains currency, and it's stable, but we're good. Like they can essentially wean themselves off of the federal government if they wanted to. That one, that's kind of like a mind blow one, and I'm kind of just looking through. Like I had that idea like a couple of days ago, but it's valid. It would work. And then there's people who are creating local internet service providers that are powered by city coins, funded by city coins. People are doing like investigative journalism, public safety. Essentially, like we're trying to do kind of two things. We're trying to like chip away at some of the things that cities already do, and try at least to do them better permissionlessly where it is legal. And and then secondly, we're trying to we're going to begin to measure how much of an improvement we can make for citizens of a city. And so this term is called state capacity. Most people don't know this. Most people don't even, surprisingly, most people working in government don't even know this term, which is like, kind of says a lot, honestly. It's like state capacity is essentially the ability and measurement of how well a government can do their job. So it's like, can you enforce law? Can you reduce homelessness? Can you ensure property rights? Can you make sure the trash is picked up? You make sure potholes are fixed, roads are built, right? So an interesting thing actually is like some cities that are like very progressive, like from a like get shit done standpoint, like Miami, they like to measure these types of things and they want to measure more of these things reliably. Some cities, which I will not mention, actually want to hide these things because they don't want it being exposed how poorly of a job they're doing. And I have like that's real. That's real. Like for example, I was talking to a CIO of a city, and I was like, "What if we did like sorry if I'm going on a tangent here, but I find it kind of I'm just like I find it interesting. I'm sort of rehashing it. I was like, what if we did like a what if we did like a net promoter score for every citizen? So basically, we could just like get their cell phone number and ask whether they would refer living in the city to a friend. So you like score it 1 to 10, just like companies do. And he was like, we don't want to do that because we thought about doing that and we didn't want that to be a public figure. And I was like, whoa, I guess we're gonna have to do it, right? So it's like, all right, so if there are things that are that should be measured that aren't being measured, city coins in the community can begin building those dashboards and begin measuring those things and holding our own selves accountable, not just the government, but our own selves accountable toward improving those scores. And so some of the things there's a lot of different sort of like there's many different dashboards you can create for measuring state capacity. Like there's different categories, but the categories we're most interested in are roughly 3 or 4. So one is the wealth of citizens. So we believe, like similar to like how Singapore operates, um, cities should be increasing the wealth of their citizens. A city where the wealth of the citizens is going down is almost like a city that is becoming sicker and sicker. And and like wealth is not a dirty word, and poverty is not a virtue, and cities should be mindful of that, and and they should measure that and have a dashboard, like you know, and they should show income inequality and things like that. So they could have like a bell curve that shows the overall wealth of the city and where it's shifting. Are they making poorer people more wealthy? Are they hollowing out the middle class? Like what's going on? Like no one has a read on this. And that's like I think 10 years from now we'll be like, whoa, that was insane in hindsight that people were choosing to live in cities and not knowing whether that city was taking more than it was making. In Miami, many people think so, but do we have the data on that? Can we do anonymized? Pardon me. Can we do anonymized sort of geo-targeted tracking of people's health metrics? Like give your health metrics, but make sure no one knows who it is, but just that you either live in the city or in the city. That's very interesting. Like, okay, are people sleeping well at night? Are they getting enough exercise? Um, and are they going to live longer? So you might also have a dashboard on like, what's the average age of death? And if it's low, like we should know that. Okay. Third thing is happiness. So happiness could be like a NPS, net promoter score, as I mentioned earlier. We kind of covered that. And the fourth thing is an odd one. I was actually I'm starting to include it. I'm like kind of deciding whether, like personally, whether like when I talk about this stuff, I talk about it because it's like a semi new idea to me, and it's inspired by my friend Balaji Srinivasan. I was talking to him on the phone last week, and he goes, I was like, yeah, we're trying to measure health, wealth, and happiness. And he goes, oh, that's interesting. I measure health. He goes, we have a lot of overlap. I measure health, wealth, and truth. And so the truth is like truth may make it into my fourth, or maybe even replace happiness. I don't know. Um, but um, truth is essentially like putting everything on the ledger of record, which is blockchains that are anchored to Bitcoin. Can we get the truth on the weather? Yeah, sure, we can get that. Can we get the truth on on sorry? Can we get the truth on what happened on a certain day? Who said what? Who spent what? Yes, we can. Can we see where money was spent when voted on by a city DAO, like a decentralized autonomous organization? Yes, we can. And in fact, we'll have more transparency over where money goes from a city than we ever did before. Like I don't like you. It's very hard to track your dollars in a city machine. Like yes, they have they have like budgets and they show you where money's going, but tracking the actual dollars, no one has access to that basically. Like no one sees that. We're not at that granular transparent level yet. With crypto you can literally see that capital flight at the speed of light. You can see that money was sent to wallet A, B, or C, and you can see where the money was spent from there. So you can track the money, where it came from, where it went, and then where it goes from there. I think that's very, very valuable. But that's kind of we have an accelerator, just to like close. Like we have an accelerator that has folks like Balaji. We have the founder of Skype that's part of the accelerator as a mentor. We have the founders of Stacks, myself, the CMO of Consensus, which was like basically the marketing firm that like blasted Ethereum off in 2017, 2016 as a mentor. And there's a couple dozen companies building on city coins right now. And maybe the last thing I'll say is we activated city coins as fast as we possibly could. We just like chose an issuance schedule really fast because we assumed the bull market would only last for like 2 months, last summer, and so we just boom published it. And and one of the things we think that we got wrong was the issuance schedule, meaning the amount of tokens that are released every 10 minutes. We believe that we were overly aggressive with it, and so we're having a community vote on Monday. And by the way, being overly aggressive essentially creates like a death spiral, which like forces the price down like deterministically. And so we're like, all right, well, we're not just going to sit on our hands and like continue that. We're going to do a vote and see if people want to compress the emission schedule and make it so fewer tokens are emitted in the future for all city coins. I think that's going to be a yes. I think that'll be an overwhelming vote yes to that, and that should provide some price support. Should also kind of like accelerate the growth of the protocol in a way. And we're doing some other cool stuff with the upgrade. And then, okay, definitely last thing I'll say is I recently published a proposal for CityCoins 2.0. So in addition to the compression of the emissions schedule, we want to see if we can take that city treasury and turn it into a DAO where token holders can vote on certain aspects, but we incorporate the city, like the legitimacy of the city itself, in like vetoing or voting on things as well. So we're kind of like starting to have those discussions, as well as decentralizing the activation of new city coins. So right now it's like, we think Austin Coin is next. We don't know. It's like, who makes that decision? It's kind of like a Ouija board. If you ever play that, it's like everyone's hands on the board, but no one knows who's pushing it around. It's like, well, we have a proposal for making it like highly measurable, decentralized, autonomous way of activating new cities, whereby if you meet a certain threshold of coins put into a city's smart contract, it would activate that city. And if it doesn't get activated within a certain timeline, pardon me, the funds would just get refunded. Okay, so basically you're reducing risk to like nearly zero, and you're ensuring that if a city does get activated, it has enough resources to like really get going and start deploying capital efficiently through hopefully a DAO mechanism in concert with the city. So that's kind of my whole spiel, and hope that was interesting. Sorry if I sped through that a little bit too fast.
No,
but
listen,
just give you
I think that was fantastic. So guys, I hope you all appreciate that the level of insight that you just heard. That is, there's about 10 nuggets there that we all need to go home and try and digest, and fantastic stuff. So I just want to say that everything that we're bringing to this community, I really appreciate Patrick taking the time to do this, but these are stuff that we believe in as well. I actually shared with our founders before this project was even conceived. And actually, as a side note, I was really getting, having more conversations with Patrick as he was launching City Coins. And he kind of just, you don't even realize this, Patrick. I never shared it with you. He's like, you sent me a text, you're like, you should get into NFTs. I think you'll do well with it. And I just kind of chewed on that for a little bit. And here we are today. And I'm very pleased to have gotten that advice, because I love the NFT space. It's a great fit for me in terms of the technology convergence of marketing and technology, blockchain, and just community building, which is things I really enjoy. So all this to say is that was super valuable insight into very macro thinking and as well as just practical applications of this technology. One thing, Patrick, I'm going to start. I say we open it up for questions, and I'd love for anyone like Parth or Raf, if you have any questions, I'd love for us to kind of start that off. But the first thing that I'd like to ask you just to elaborate a little bit upon the missional aspect for me is really interesting with City Coins as a what I would say is a politically very politically minded person, but frustrated with the political environment type of person. Is how do you really implement and affect change, and how do you do good and change the things that you don't like. I always found that to be very difficult, just from say setting up a pack or just voting and putting your weight behind a candidate. That's kind of the old way of thinking. So with City Coins, the way that we can use the power of the blockchain community and the crowd to come together and actually say, hey, we're just going to go and do this. Mayor Suarez, I'd love for you to check it out because we're doing it, either way, right? So like, that's such an interesting way to go about it. But I would love for you. One of the things, this kind of the fundamental pieces of our, the subject matter of this community is again financial literacy, understanding how to allocate capital in a way that is going to be different than the old way of doing things, looking for new opportunities, and really educating folks who are interested in investing into new things. Now, we're not financial advisors. This is an educational purposes community where we bring these opportunities to the table that allow people to then make their own decisions that are best for them based upon just an influx of new opportunities and information. I'd love for you, Patrick, to share a little bit about just kind of the financial incentive for City Coins, because that's what obviously was super interesting to me. I never really understood the power of stacking or mining, but there's an incentive to miners. There's an incentive to holders, which is again everyone in this community, or at least me and Keegan. I don't know if Keegan's on the call because he's at that conference in Miami, but we're both holders of Miami Coin. He was a miner of New York City Coin, and I'm stacked long on Miami Coin. So I picked the 25-week option. I said I'm just putting this in, and the price has obviously gone up and down, but with being in early and the stacking, it offsets the fluctuation of price. So it's a really interesting kind of just investment opportunity for folks who are, one, curious and interested in this protocol, but two, who also want to put their capital to good use. So I'd love for you just to share a little bit about that aspect of it.
Yeah, sure. I'll make a quick comment just on Bitcoin first, and take like a kind of like 30,000-foot view on Bitcoin sort of versus the dollar and what is happening there, and then go into basically comparison between municipal debt and municipal equity, which is kind of like the difference between city bonds and city coins, and then I'll describe stacking if that's helpful. So first, I'd say like everyone that has an internet connection is going to be an investor by the end of this decade. That was a probably crazy thing to say back in like 2000, but I think it is going to be the case, both out of necessity and accessibility. So what I mean by that, the U.S. dollar is, again, not financial advisor, but the U.S. dollar is a stable currency that loses value every year. It used to lose like 2 to 3%. Now it's losing, official numbers are 7.9%. But when you dive deeper, it actually looks more like it's somewhere between 12 to 20% year over year. And so basically that's kind of like a tax on the middle class and poor, which is really sad. But I don't see that trend going away. And so, companies like Coinbase, Robinhood, et cetera, are making it very easy to get into Bitcoin specifically, as well as other cryptos. And so what Satoshi did in inventing Bitcoin was he said, okay, US dollar is very stable, and that's a pro, but it loses value over time, which is a con. What I'm going to do is I'm going to create something I'm going to put the ball on the other side of the end zone. And I'm going to create something that is inherently volatile, but on a trailing sort of 3 to 4 year average, it increases in value over time. Bitcoin, because of its 21 million Bitcoin scarcity, um, is basically, it's more like a element on the periodic table of elements at this point. It is like the money element. It's pure money, and because we know that amount isn't going to, the amount of Bitcoin that will ever exist isn't going to change. We can rely on it as like a stable, as like a in a way, it's more stable and predictable than the U.S. dollar in the sense that we know the emission schedule, we know how much is going to be made, whereas with the dollar we don't. And so, what's happening now is Bitcoin is becoming the benchmark across which you measure all your investments. All the smartest investors I know, that whether they're from Silicon Valley or New York City or or around the world, they're essentially benchmarking all their real estate, all their stocks, all their other cryptos against Bitcoin. So it's like it's almost like an op versus no op. The opportunity to invest in something that you're interested in or want to see succeed, like maybe you invest in Tesla, versus the no op, which is like do nothing, just hold Bitcoin. And more often than not, the no op of just holding Bitcoin like beats investing in other things. It's beat the S&P 500. It's like demolished the S&P 500. It's likely that Bitcoin has actually broken gold. Like gold is a safe haven asset. I think people are more interested in accumulating Bitcoin at this point for a variety of reasons. And so like you could actually see gold get broken as the commodity that offsets inflation. Okay, so I just wanted to get that out of the way. And maybe last thing I'll say on the Bitcoin thing is like, it's pretty much every country, company, and individual's prerogative to accumulate as much Bitcoin as possible because it is effectively the measuring stick upon which you measure all monies or all investments. Okay, so now let's talk about city coins. So the traditional way that that cities would allow people to hold some financial aspect of their city was municipal debt. So what this looks like is a city would issue a debt instrument. Essentially, they'd say, we're going to issue debt that is payable, that we'll pay it back over the next 10 years. We're going to borrow $500 million, and we're going to sell. We're essentially going to see who purchases this, and we'll pay you back with our taxpayers' money. So it's like, taxpayers didn't opt into that. They're like, all right, I guess I'm paying for this bond, that you just created to raise more money. So it's like a financial instrument out of obligation rather than opportunity, or as opposed to opting into it. So city citizens, City citizens are just like, all right, paying taxes, whatever. And the people who are buying those bonds are not city citizens. I don't think anyone on this call owns municipal bonds. Well, let's be honest. It's like super low interest rates, and typically they're bought by like large institutions or sovereigns. And when you're making money on a municipal bond, it's like usually because the spreads are large and that city is about to go bankrupt. So muni bonds have their purpose. They're useful, but you're not going to like 10x your. It's really hard to just outright own a muni bond and make a bunch of money. It's like you're gonna make a small interest rate on it. Versus city coins, which is closer to something like municipal equity. It's almost like a cap table that's like bolted onto a city. It's not an official cap table, but it's almost like one. And with the added benefit of you can use those coins to program applications. You can use them for organizing people, funding, etc. And it's far more likely a city citizen would want to hold a city coin, or would hold, or actually, it's far more likely that a city citizen, it's like 1,000x more likely a city citizen would hold their own city's city coin than it is that they would hold a muni bond. And I think I think if we get this right with city coins could be like 100x improvement on municipal bonds. And so just similar to municipal bonds, which have a yield, city coins also do have a yield. They're funded by miner throughput, miners forwarding stacks to mine more city coins, and that nominal yield, should sort of um, um, like over time it'll kind of like level out. But if the value of the city coins themselves can, they can 2x, 5x, 10x, 20x, 100x. They can also go down, of course, like we've seen up and down. And basically citizens can have a shared stake in the upside of a city, which is very, very different from municipal bond, which is just holding a city's debt. And this has never been done before, so we're like, we're learning as we go. But that's the basic gist. I mean, I've mined a ton of city coins. I've earned a lot of yield off them. I probably like netted out somewhere around what my investment was originally. But I'm kind of in it. I'm in it for like decades, not months. So we'll see where it ends up in the future. But I think basically the score will take care of itself. I'm not like I'm not just trying to get in, get rich, and get out. Just kind of like get in, hold for the long, long term. Because if city coins end up being the kind of like mode um, that we move toward as like civilization, they could be worth a lot of money collectively, like all these different cities. And I personally want to put every city in my portfolio. Like I want to hold all those cities and bank on open source, propelling their value forward.
I love that. Yeah, no, I think you also made a good point on that video you shared with me that one time. Whereas, if you're bullish on a city and the city governance, you want to hold in mind. And if you're bearish, you want to sell and obviously stay away from it. So, what's interesting to me is we're seeing kind of from another perspective people being very bullish on new cities. So people are moving to Austin, people are moving to Miami and Florida, people are moving to Charleston, South Carolina, places that they want to live and places that they like and cities that they think are on the upswing, which are ripe opportunities for sharing in that investment or sharing in the upside of those cities as all that new growth happens. So very, very, very cool, very, very, very forward thinking. I really appreciate you sharing all of this, Patrick. Raf or Parth, do you guys have anything you want to contribute or questions you want to ask? And we could open it up for some crowd questions. But I think that this, I want to be respectful of your time, Patrick, who has a young baby boy at home, and I know you don't get any sleep. So want to make sure that we're aware. Gracious, you're very gracious of your time. So I want to make sure that we're being aware of that. So anyone who's got questions, let's start to open it up. And this is your opportunity to speak to an expert.
Well, for one, I'm over here still processing. My mind is a little bit blown from all of that information. Thank you, Patrick. That was some insight that I think is very much pretty much impossible to find on an open market or just having a normal conversation from anyone. I had a quick question. What's your perspective on the EU stuff that went live yesterday, the vote?
Can you tell me a little bit about what happened? I saw like a headline, but I was just like heads down working.
Yeah, so basically, they passed a resolution that any custodial wallets or non-custodial wallets, so anything like a MetaMask or anything like that, those centralized exchanges like Coinbase are going to need to have KYC before allowing someone to send a transaction to them.
Oh, it's obviously ridiculous. And basically, what they're that is they're gonna lose legit. Like, there's a weird thing that's happening, right? Like, New York City has a bit license. China banning Bitcoin. The EU doing things like this. The SEC maybe not winning their case against Ripple. Or these these like previously sort of trusted institutions are losing legitimacy by um, by basically doing what's not in the public's best interest. And it's like, I think a lot of the time these folks are, it's almost like when a country says they're going to ban Bitcoin, they're not banning Bitcoin. They're cutting their country off from Bitcoin, or they're trying to. It's almost like holding your breath. It's like you're only hurting yourself. And I also think like um, just like Uber and Airbnb, when they went to new cities, there's obviously, I mean, there's some negative externalities with like an Airbnb, for example. It's like, okay, well, can I even find a place to rent, or if rent's going up, etc. But on net, the people want it. They want Uber. They want crypto, and it becomes a very social, like, we're not playing the same game. It's not like the same board game that we were playing in the 90s, where like no one was on the internet, no one had a heads up view and could communicate with each other instantly as a group. There's no concept of outsider trading like GameStop, AMC, Dogecoin, Bitcoin. Like cloud communities have a lot of power, like and I'd even argue, that like the U.S. government, like Twitter, is closer to the U.S. government now in terms of like what it is. Like Twitter is almost the U.S. government. It's almost the Supreme Court of public opinion. And if enough people vote out politicians who are serving rent-seeking elites, the message will be clear that basically they want crypto. They don't need the government touching their stuff. Like this is a game that I think is going to not play out. Just like there's been a lot of things that haven't played out well for governments, especially Western governments, in the past 20 years. But I think this is like another whole category that is like too prickly for them to handle. And within the next decade, I think it'll become very clear that politicians who don't value freedom of speech, who don't value freedom to own your own crypto and transact with people, are going to get voted out. I don't think it's going to be a very. I mean, obviously you'll have some like you'll have like, you want to make sure you're not funding terrorists, yada yada. But and of course there'll be like a neo-Luddite reaction of like people who worship the state. They like replace God with Gov. They're like, okay, democracy is their Christianity, and they're like, okay, our democracy. What they mean by that is, not our democracy, like everyone's. They mean like theirs, for their control. Those people, those neo-Luddites, basically are going to put up a big fuss, a big fight. But in the end, they'll all be crypto holders as well. They'll just be the last ones in. Just like people who say, Bitcoin's a scam. It's like, okay, well, you're going to have to hold it at some point. So I don't know. I have a kind of like stoic approach to this. I'm like, all right, they're going to be like, governments are going to be silly about things, and they're going to stub their toe over and over again until the public, kind of just shows them that they don't want that. Sorry, that was a really long-winded answer. Apologies.
No, you're good. That was, it's pretty much exactly where I think too. I think you're essentially cutting off your population from this technology that they can innovate with and potentially create so much value with, in terms of peer-to-peer or business or whatever it is. Why, to me, it's confusing why they're just taking the approach of fear, and they're like, we'll just wait on it, instead of defining how the open, like metaverse and open kind of connectivity around the world is going to work with all these financial systems.
Well, I mean, like, I'm very pro democracy when it's real democracy. I think a lot of democracy is actually oligarchy dressed up as democracy. You have like same families getting voted in, and in large part, it's more about power and control than it is about terrorism or safety of the children. I'm just like, I'm very, yeah. Another like just like quick thought is, I think often societies think that they're at the end of history. Like um, the Marxist, the feudal state, uh, like all those folks, they were like, we've achieved the end of history. Here we are at our finest point, and we cannot improve upon it any further. But the reality is, 200 years from now, 200 years from now, the way we organize ourselves as society is going to look so different from the modern nation state. It's going to look so different from representative democracy. And will it involve crypto? Maybe. I think I'd assign like a 99.999% confidence that basically all politics will become crypto politics, and that all states will become network states. Like I very firmly believe that that's going to happen. That's why I have like high conviction on what I'm doing, and why I'm going to be like doggedly persistent on this like forever. But that, maybe that's for 100 years, and then we evolve to something else. But I wouldn't even say what we're heading toward in the crypto space is the end of history. But a lot of people the same people who view the economy as zero sum, the same people who want to decommission nuclear power plants that lead to rolling blackouts, um, the same people who believe the government has the answer for everything, are the ones that believe that we're at the end of history. And I think their doctrine is closer to religion than it is to any sort of like rational bottoms up thinking. And that's not to say we should throw out what they should throw out. And like what, especially in the United States, like the founding fathers were effectively game theorists. And did they get everything right? No, but they left things open to improve it, right? And I think basically like the people who are in crypto today working on like basically crypto civilization are a game theorist as well, and they're trying to build something new. And it may be that there is a departure from the legacy state to the network state, similar to how the U.S. had to make a departure from the Red Coat Army and the British to create their own freedom protocol, or their own protocol that had rule of law, that had sort of freedom of speech baked in, privacy baked in. You have right to privacy, etc. And I think we're just creating that over again. We're like, you're gonna have you can think of like Indonesia as like an archipelago. It's a country made up of many islands. It's not all one contiguous. I don't know how to pronounce that word, but contiguous, nation state, like something like maybe Australia is. But that kind of gives an example of like what a network state could look like. It's like you have like protocols that act as like countries or city states that sort of spread their rule of law and have their citizenship sort of scattered across the globe. Like I feel very confident that is going to happen, and I think like our old institutions, like I'm not an anarchist by any way. Like I really want civilization. I want smooth civilization. I want peace. But like our old institutions that were trusted in the past, I think are still worth saving. Maybe they need a little competition, but they're still worth saving, and some aspects can be replaced out with better upgraded aspects. But I think they're in a very precarious place right now because trust in legacy government, trust in the CDC, trust in the WHO, trust in the FDA, trust in the FAA, trust in the SEC, trust in the media basically is like our sense making apparatus, and we really like trust in that. If you just look at the stats have gone down. It's not like I'm a centrist. I'm not one political party or another, but like just like look at the stats. Like people just don't trust legacy institutions anymore. They don't trust universities anymore. They view those as like madrasas that are not necessarily like teaching reality anymore. We're like totally primed for something new, and I think crypto is sort of one answer to it, and at least on my end, I would like to establish something that improves quality of life and improves truth, like canonical, on-chain truth, mathematical truth, like values having skin in the game, value signaling rather than virtue signaling. I'm just like, I think that's a much more positive sum future than the zero sum one that we're starting to drive toward right now.
Yeah, absolutely. I think we got our first guest on stage that has a question. This is Chain G. How you doing?
Hello. How's everyone?
Good.
Nice. Yeah, Patrick, thank you so much. This is man, what an amazing chat. I'm a bit like Path. I'm trying to process it all. It's a lot to take in, but it's super interesting that the city coin sounds amazing. And I guess the transparency that brings is just it's undeniable. So that sounds really cool. One thing that what I grabbed from your chat was the fact that the US dollar is like declining in value.
Hey, Shane, you're a little muffled on my end. Do you mind speaking up or moving the mic closer to your mouth?
Can you hear me right now?
It's kind of the same. Maybe we just push forward.
Okay, I'll try my best to speak a bit louder.
Thanks, dude.
Yeah, I'm kind of new to the space. I came in through NFTs, and then in the last sort of month or so, I've really started to dive into understanding a bit more about crypto. And I'm sort of at the point where I'm trying to understand stable coins and their place in the whole thing. And if the US dollar is declining in value, what does that mean for stable coins?
Oops, sorry. Yeah, so I think right now the U.S. dollar is the world reserve currency, which just basically means that all global, almost all global trade is happening denominated in that currency. And because that is the case, it creates demand for U.S. dollars. And you could argue that the U.S. dollar is the primary export of the USA. And so this is a temporary monopoly on global reserve currency that any country will have. And this happened with the Dutch, and it ended through inflation. It happened with the English, ended with inflation, and it's happening with the U.S. It's ending with inflation. And since the U.S. is hyperinflate, I mean not hyperinflating, and maybe won't hyperinflate, maybe it will, but the inflation is there for sure. But a lot of other countries also have I think there are like maybe 30 or so. I don't know. I think there's like 30 or so countries who have lower inflation, but they're not the world reserve currency. So they're not like the unit of account globally. And let's say inflation stays under somewhat control, stays under 10%, which I kind of doubt, sadly, over this decade. You could still argue, well, we need just like a stable dollar so we can basically do business on some extended timeline. Like you might use a stable coin as collateral for trading or for a loan, but you might make the payback or the loan schedule, maybe not 2 years but 6 months because you don't trust the inflation. So inflation is kind of like noise in the information system of money, and the more there is of it, the less useful it is. So like maybe one day we will have to get off the US dollar and use something else. And so like some potential substitutes could be like the euro, or maybe the Chinese yuan, which I kind of doubt actually, because I don't know if they want to open up their books like that. A third option is having an Oracle-based basket of goods. So just like the CPI, Consumer Price Index, is measured by like price of bread, price of housing, price of milk, price of gas, etc. You could have you could have like on-chain price discovery, and basically use a basket of goods to create a stable coin. That may be an actual ideal future state, because then you're not actually relying on a US dollar potentially in that scenario. So that I think that's kind of like where I see that going.
Cool. Thank you, Patrick. Appreciate it.
Thanks for your question.
Awesome. Thank you for that.
Also, NFTs are badass. Like NFTs literally bootstrap community. That's like my one-liner on NFTs. They bootstrap community, and ideally that community can have like a shared scoreboard, like a basketball team does, to like win a game or like accomplish something. It'd be cool to see a community like this or any other NFT community kind of like just put their community together to accomplish goals or like get toward milestones.
Hello?
Hey, Natty, how you doing?
Good, good. First off, thank you so much for your time. I'm very new to, this space. And I guess my only question is, what piece of advice do you have to offer for people that are trying to leave their print in the crypto world through Web3 projects?
So like the sort of like non Web3 world into the crypto world.
Yes.
Yeah, I would just hang out in Discords. Like, I would find Discords that are interesting to you. Be involved. Don't just ask how you can help. Just go help. If you see something you can do, like, let's say you have a skill where like you're an illustrator. It's like you might do some illustration for a protocol. And I think there's this kind of like, I really believe in this sort of like law of reciprocity, where if you just keep adding value, the idea of you leaving creates a hole and might open up an opportunity for like full-time work or part-time work. And so I like that strategy, because what it does is it gets you to career market fit much faster than going through an application process at some company where you're not even sure if you like working there because you've never worked there. You don't know the people, they don't know you, and you're asking them to evaluate you based on like not a whole lot of background or experience that they've had with you. So you're like exiting the tournament and just playing your own game, basically. And crypto is like built for that. It's open source. So I think Discords like this are a great place to start, and just being helpful without asking how you can help is the best way to kind of like start to see what you enjoy doing with which projects you enjoy doing it with.
Awesome. Thank you.
Pleasure.
Well, great. I think we see Sebastian's joined us on stage. He's always got great things to say. But Patrick, I don't know how much time you've allocated, but I'd love to hear what Sebastian has to say. And if you got some more time, maybe a couple more questions. But it really just letting you lead the way here.
Yeah, of course. I can do one more question.
Hey, Patrick. Thank you so much for all the information you just gave us. I learned so much for the past hour with you. My question is this: could you elaborate a little bit more when it comes to the city coin, your investment strategy? I know, and we all have different investment strategies, but your investment strategy is to diversify your portfolio with one coin from different cities. Why would you do that instead of like someone like I would think of, like, for example, just investing in the cities on the coins that I know that might be like better off. Like, for example, I would do like something like Denver and Miami instead of New York, because are we even allowed to buy the city coin here in New York?
Right. So my answer to that is kind of like you can bet on a city that's like a blue chip city, like Miami, and or like my strategy is to mine all the coins, just because I want to. I think I'm like a little different than most people. If this were not like the project I came up with, I'd like to be picking and choosing cities. Um, and I might bet on the turnaround. So like San Francisco coin could be a city where you actually want to bet on the turnaround. So it's like, maybe it'll 10x up to Miami's price, if some good stuff happens there, right? So there's reasons to bet on cities like SF or Detroit, that could turn around. I think I don't want to give investment advice because it's not really investment advice. But like I I'm kind of like I'd love to. My strategy is, spend 12 hours a day working on this project broadly, and and hope that every city does well over time, and want to hold a bit of every city, because who knows in the future, like maybe actually strategically, personally, and not just for an investment decision, but from like a personal